Welcome back to Business Morning. Now, let's move to our first conversation for today, which is gotten from the fact that the Nigerian Finance Minister, Mr. Wale Edun, when he says that banks must back innovation, not just big corporations. And our Nigerian's Minister of Finance and Coordinating Minister of the Economy, Wale Edun, has urged the banking sector to redirect more of its lending and investment focus towards innovation-driven enterprises and even small businesses rather than concentrating heavily on large corporations. Speaking at the recent Economic Policy Forum in Abuja, Edun emphasized that sustainable economic growth in Nigeria depends on empowering innovators, startups, and technology-driven enterprises that are building the future of the nation's economy. The minister noted that while large corporates play a critical role in actually stabilizing industries, small and medium-sized enterprises, SMEs, contribute over 50% of Nigeria's GDP and are responsible for the majority of new job creation. He stressed that financial inclusion and innovation finance are essential pillars of President Bola Tinubu's economic reform agenda, which aims to unlock productivity through entrepreneurship and digital transformation. Industry analysts have long criticized Nigeria's banking system for prioritizing low-risk lending to established companies and the government, while startups and even small businesses actually struggle with limited access to affordable credit. Edun revealed that the federal government, through partnerships with development banks and fintech companies, is actually developing frameworks to de-risk SME lending and create innovation-focused financing windows that will encourage commercial banks to support early-stage enterprises. In his words, Nigeria's future billion-dollar companies are being built in small hubs, labs, and co-working spaces across the country. And he says a bank must see these innovators not as risk, but as partners in national development. The call from the finance minister comes at a time when Nigeria's digital economy continues to expand rapidly, with record levels of youth participation in tech startups, digital finance, and creative industries. Economic experts say a stronger collaboration between banks and innovators could help diversify Nigeria's revenue base, reduce unemployment, and position the country as Africa's innovation powerhouse. And joining us this morning is our in-house financial analyst. May I give you the honor to introduce yourself?
Good morning, Destiny. Thank you very much. Good morning. It's my pleasure to be here. So my name is Muhammed Akanji, who is a member of a senior research and data analyst at BusinessDay here. And it's my pleasure being here, at least, to be able to
As always, you know, when we hear that we're going to be having you, it's always a pleasure because
thank you very much.
You know how to give it to us the way we want. And in this particular
thank you. I'm really on board.
In this particular topic, I'm sure you're going to do a lot of justice because it's actually a good thing that the finance minister is actually, you know, lending his voice to this effect, which has actually been a problem. When you hear people say they want to borrow money for, you know,
innovation,
you know, it's always hard. You hear them say, I can't do bank stress. You know, but with this voice by the finance minister, as he has been able to infuse his voice in this, it is actually a good thing. And
very good, Destiny.
It is. It is actually.
And it should be a wake-up call to banks anyway. I'm sure by the time we dissect the nitty-gritty of what is actually involved in this, we'll see that it is actually a step in the right direction. And just like the minister mentioned, it's very important that these startups, you know, these ecosystems, these co-creation hubs are seen as partners in nation building rather than risk factors, you know, or risk centers. But that's where banks see them. Like, so just like you read there, they always prefer the big corporations for a lot of factors, a lot of reasons anyway.
Know that they're already made and all that.
Already made, is guaranteed, there is element of, you know, the risk factor is actually quite low compared to businesses that are just coming on board, that's just starting, that you don't be able to know what the future is all about. But this is tech. And we all believe that the future is definitely in that particular space. So it is good the minister mentioned that, and that the need for them to be able, for the need for banks, the lenders, to see them as that partners in nation building, because of the centrality of this to the GDP of the nation, to job creation itself, which I think you read as well as to the multiplier effect it tends to be able to have on a lot of other important segments of the economy. So it is good you mentioned that, but I think it should actually be followed up with actions.
Yeah, exactly.
Definitely.
So section by section, I know that you're going to answer this, but for the viewers to be clear, on this very good development, I think you should just give it a section to section feel. And the first question is like, goes doors, like, how do you actually interpret Wale Edun's call for banks to support innovation and small businesses rather than focusing mainly on big corporations?
And the large big ticket transactions. So as I said, so the minister is trying to be able to encourage the banks to pivot away from the current model, which, just like I said, if you be able to look at their banks, when we look at banks books and you'll be able to look at them, you see that a larger chunk of their credit, the credit that they granted, actually be able to go to established institutions.
Exactly.
Big companies, blue chip institutions, blue chip companies out there. And just like we were able to mention earlier, a lot of reasons for that, limited risk. These are established businesses where you tend to actually be able to be guaranteed that you can receive back the loan given to them when it's actually given. But the minister is actually telling us there that they need to be able to look away from that conventional, traditional, method, of lending. So now, the only way that banks can actually be able to be an important catalyst for inclusive growth, because the major challenge with that platform, with that system, is that you have noticed that the growth is actually being concentrated in few hands rather than being broad-based, that can be able to actually be able to go to people that are generally referred to as the people at the bottom of the pyramid. Because just like we mentioned, go to Yaba, go to Ikeja, go to CMS, you see Nigerians, young Nigerians that are actually quite innovative and quite inventive. And one of the things that's actually buckling them down is lack of access, to credit. If you ask a whole lot of them, 60% of, youth that will actually be able to be interviewed by the recent survey mentioned that the major challenge preventing them from scaling is access to credit. So the minister coming on board to be able to encourage banks to pivot away from that model towards this inclusive growth strategy. I think it's actually a good step in the right direction. Just like I mentioned earlier, the need to actually be able to follow it up with actions, walking that particular talk will be very, very important. Because just like we said, the SMEs, now, I think the last report from MBS mentioned that they contribute about 50% to the nation's GDP.
Exactly.
Employ about, in fact, the government is actually trying to be able to say they can be able to contribute 70%. And the contribution to employment as well is around 75 to 80% in terms of employment that it creates. So this is actually a gold mine that banks too needed to be able to look at, rather than, just like we said, the big corporations alone. And I think the central bank, the Ministry of Finance, the Ministry of Industry needed to actually be able to have maybe a policy document that can at least mention, okay, out of these loans, maybe a particular percentage must definitely be targeted towards this. Just like I can say, okay, this is for education, this is actually for this purpose. Can say, okay, for every loan that you are given out, this certain amount, for example, could actually be directed to that particular purpose. So that will allow these inventors, these young innovators, these creators to have access to those pool of funds and can allow them to be able to scale their operations.
You'd be amazed how, how very good these small startups are actually doing a lot and removing a lot of unemployment from the street. It's actually doing a lot.
Which the big corporations may not be able to create. Of course, we're talking about in that scale. It's not like, yes, they are also job creators, they are also contributors to the economy. But what's of this pocket of small businesses? I mean, small SMEs, innovators. I mean, it's great.
Yeah.
Really, really
okay, from the financial standpoint, right? What risk and rewards do banks face when investing in innovation-driven enterprises?
Of course. So, just like the first we mentioned there is the burden about, yes, banks are concerned about the default rate.
Okay.
If you invest in innovation enterprises, these are businesses that are still at the budding stage. When I say budding, I mean embryonic stage.
Exactly.
Nobody knows what the future holds. then coupled with, the macroeconomic factors that you cannot predict, the economic situation itself. So the default rate sometimes is always very high, and that's why banks are always very careful to give out the loans to them. Yes, that is major challenge that they actually be able to mention. Of course, they sometimes banks mention, credit history. In fact, one of my friends actually mentioned that okay, before we can be able to give you this loan, let us be able to see your last 5 years cash flow, or your books in the last 5 years. I'm talking about the business that just start, maybe just a young graduate who just be able to finish up from maybe NYSC, and you're asking for the books in the last 5 years. Sometimes, so the credit history is what banks sometimes mention as a major challenge why they don't want it to be able to give loans to startups or some of these businesses.
Exactly.
And finally, maybe sometimes market volatility is another reason. I remember one of the bank MDs, that was actually asked about why are you be able to give, just very less, single digits of your loan portfolio is actually given to SMEs. And he mentioned about sometimes is the market volatility. And when the volatility in the market sometimes can be able to consume these businesses. And then some of them will just be able to go into their bad books and they may not be able to reckon with them. So innovation sector sometimes can be unpredictable because things are changing every day. So as you're talking about, you are still conjuring up these ideas, but we're trying to be able to form up this particular project. Another latest development has emerged. Look at the raise in AI, for example. You can be able to see, as we're trying to be able to digest one, this, you will just be marveled as another pace at which some of these developments, some of these innovations, some of these groundbreaking things are actually coming about. So the volatility in the market sometimes is what preclude banks or banks and then credit institutions from actually giving loans. But at the same time, despite all this risk, there are unimaginable returns, Destiny. That I believe the banks can be able to take advantage of, not only for themselves, but also in nation building, in actually be able to contribute to the nations.
Sometimes you not even really blame the banks because when you think about, there was one time I was doing a research, I was just asking some people, are you owing any banks? You'll be amazed.
What people can tell
You'll be amazed that when the banks have tried to
give out some of these,
to just do good, and I think what these banks are trying to do is just to test
the market itself.
Yes, to test the market. Let's see. People have been stopping us to give people loans. Let's just try them with this little loan.
And you'll be marveled.
Yes, and the number of people are like, I can't use like again because I'm doing like it's just like when you're owing someone on your street, you understand? Because you're owing that person, you have money to buy something else. You don't go to that place that you're owing because you know that definitely the money will be collected. So you're not able to buy the new things.
This is a very good thing.
Yeah.
So I could test the waters with, some of these, little risk, maybe you can be able to call them risk transactions and see how will the market respond. Yeah. You understand? Yes. Of course, it does, because it's a market of volume, sometimes not about value. For such a segment, it's about volume. Just like you said, if most of all these defaulters, in quotes, paid, you can imagine how that will be able to reflect the multiplier effect that will have, on the bank itself. But so sometimes that is one of the major reasons why they're always very skeptical, in terms of giving loans to innovation-based schemes. And look at, based on the experience that they've had, which is experience you've cited. But as you said, there are also returns.
Sure.
Huge returns as well from actually be able to invest in all this, because the return is very huge. Today, we all know the pace of innovation, and it's such a dynamic and a fluid market where the money flow is actually very, very huge. It's a market that is actually going very, very big. At the same time, the return is also be able to allow banks into portfolio diversification, rather than always real estate, for example. Sometimes banks, especially on these real estate, you tend to be able to see them diverting a lot of attentions into those, maybe because they felt like politicians or those whose sort of bread is actually not clean. But by investing in tech and innovation ideas like this, it allows banks, for diversification of their portfolio. I'm trying. So, and I think the returns are also there, but the need is just to be able to balance the risk that are involved, just like you said, as well as likely returns that they are likely going to be able to get. In fact, some banks today are priding themselves in brand equity to say, we are the number one leading innovation bank in Nigeria, you know, in terms of, some banks are actually like that, and they see themselves as projecting themselves with that image, that if you have any idea, any creative, ingenious idea that can be able to transform the economy, that can transform lives, bring it on board and be ready to be able.
I know that a lot of banks may not be able to assist, you know, so much, but they still do. You've heard of that, I think I heard of some banks that assist women. They give women an edge. Exactly. They make them, you know, go out there. And if you don't get a wind of these things, if you're not aware of it, you're not aware of it. But if you're aware of it, a lot of people take advantage of it, and then, you know, helps those small businesses. Banks want to do this thing, you know, like we said. But then, what structural or policy changes do you think are actually needed in the financial sector to make innovation financing more and more viable?
More viable, of course. Maybe first, the interest rate subsidy. The interest rate itself sometimes is businesses that today, I'm talking about the interest rate is actually on the very high side. And that is killing a lot of businesses. The government through the central bank needed to do something about that. Yes, at the time, the inflation, the monetary policy rate is about 27%. And the purpose why that was actually made to be such high was to be able to tame and contain inflation. You know, the inflation. And luckily, in the last 6 months, we've actually been seeing inflation easing off. So, and in fact, I think it was part of the news. In fact, October prediction was like, it was 18.02% in September, likely going to be able to come down in October, when it is actually released by November 15 by the MBS. So first, I think the interest rate subsidy sometimes is what is actually scaring a lot of businesses away, because we are seeing 27% as monetary policy rates. By the time the bank that has symmetric corridor to it, we're talking about a 30% interest rate. Destiny in a year.
Oh my God.
That's why even some of those defaulters say that is what scared a lot of people. They will tell them, because at that point you needed the money. The bank will tell them, most of these defaulters find it difficult to be able to pay because the interest rate has been so huge.
But then when you find out that
tip into what they actually be able to pay back. So sometimes
banks are also cheaper, if you ask me, because if you go to most of all these borrowing apps that people use,
it's quite crazy.
It's crazy. But that's the
banks sometimes
the subtle way banks collect it from them, and you know the interest is still subtle compared to
but some of those, apart from that, we're talking about, that's a yearly thing anyway. It's on a monthly basis. If you're able to disaggregate that to a monthly basis, you're talking about people still paying an average of about 2 to 3% interest on a monthly basis from the banks. So 27%, because that's just from the central bank, overnight lending, they will still need to be able to add their own margins to it. So most of the time it's around 30% to 32%, which is quite not different from most of all these other loan apps. And none of these other loan apps take advantage of the banks, because they feel like, okay, if the banks will be able to charge this, then we that can be able to give you easy access, you know, like instead of, a lot of paperwork, submit this paper, submit that, a lot of things, and they can be able to get them in record time. So I think that's it. We're not really going to some of those loan apps. But the question there is, the government, the regulators needed to be able to look at the interest rate. The double digit is killing a lot of businesses. Not only even the innovation enterprises, most of the other businesses are actually lamenting around that. And then maybe the government has, apart from banks, a public-private co-investment hub. Maybe you have like a bank where the government is actually claiming we have like a fund that's actually designated, that's actually designed to be able to meet that particular purpose. But maybe information sometimes is what most of these innovators are not aware of. But maybe the true National Regulation Agency, they needed to actually be able to create a lot of awareness, information, notification, awareness, let people actually be able to know about this. And then private sectors could actually be able to collaborate with the government to be able to make that available. And then, these are some of those ways that we feel like they can actually be able to enhance innovative ideas and innovation strategies in Nigeria.
Okay, so how can the government and regulators actually incentivize the banks to fund small innovators without compromising the financial stability
of those banks? That's okay. Maybe it's just still aligning back to what I mentioned earlier. The interest rate subsidies, I think, is one of the ways the government can actually be able to help. You understand now? The interest rate subsidies coming from the central bank itself, which is actually the government bank. So if they can try to be able to reduce that, fine, maybe till the end of this year, we may not be so sure whether we'll go back to a single-digit interest rate. But at a double-digit interest rate, just like I said, Destiny, it is killing a lot of businesses. It is. That's just interest rate. Don't forget, they still have other operational expenses to spend on. You want to buy raw materials, you are paying for utilities, you are paying for these, rent and the likes. So by the time you want to look at all those, it can be discouraging to a lot of businesses to say, okay, interest rate alone is almost in that particular space. So that's subsidies for some, in terms of interest rate subsidies or interest rate relief, the government needed to be able to give that, you know. Then incentive as well, maybe also there should be like a regulatory sandbox. But I feel like more or less like for banks to be able to have maybe a checklist for banks to be able to access funds or to be able to access grant from government is for you to be able to tell us how much have you contributed, what SME products do you have? You know, it's something like you can say, oh, this is what you're actually doing and what has actually been the impact. Do the impact assessment for you to also be able to benefit. Maybe it can be from tax holiday from the government that, oh, this is what we are giving out. If I can actually be able to empower, for example, 100,000 Nigerians, the government too can actually be able to come with a sandbox to say, okay, if you do this, your taxes could actually be able to go down. Or these things are actually, in terms of funding that you can be able to also be able to get from government, you can also be able to provide this to your other incentives. So we feel like the government and the financial regulators need to be able to provide some of these incentives, interest rate subsidies, you know, regulatory sandbox, public-private sector investment, collaborative investment as well, will actually go a very long way to actually be able to enhance innovative financing. Because this is actually what is actually done in advanced countries, where you're seeing the pace of, you know, innovation growing at an accelerated rate.
Oh, wow. Okay, now, so what role can development finance institutions, venture capitals, and even fintech partnerships play in actually bridging the innovation funding gap?
Of course, the DFIs, they are for long-term finance, and I think that's what is actually needed. Some of these business sometimes, before they can actually be able to turn the corners in terms of making profit, it's not an overnight thing. Destiny. You start the business today, you don't just expect profits to actually be made. So
you have to build it.
And so if it will be difficult for short-term loans to actually be able to get to them, because by the time they get the loan, a 6-month loan, for example, a 1-year loan, before you know it, they've actually be able to use virtually all the returns to pay back interest. So developing financial institutions, they are long-term, they give long-term loans, and that can actually be able to help, you know, those institutions. So they can be able to provide such long-term capital that can enhance them. So that allows them to be able to have a lot of buffer to ensure you can be able to plow back whatever returns you have in the business. You can grow the business, and that can allow them to be able to do that. So I also believe, remember, venture capitalists as well, they can be able to also offer equity financing, you know, in terms of saying, oh, Destiny has the idea, this is a very good idea, maybe to be able to provide electricity, for example, to people in your community, and I have the money. As a venture capitalist, actually be able to come together and say, okay, let's put this money into this. Of course, it will still be a win-win for everybody at the end of the day. You're actually solving the problem and also people together. So equity investment sometimes. So maybe they should not be so rigid in that regard to say, oh, this businessman wanted to be able to steal my idea. So that equity partnership, I think, will be able to go a long way for venture capitalists. And also mentorship as well. So some of these VCs have actually been able to see everything. And they know, in fact, they've actually been able to understand the whole value chain or the whole structure, the spectrum of what is going to happen. So they can also be able to provide mentorship to some of these innovators. And I think it goes a long way. And that's what some of them are actually doing. If you go to innovation hubs, maybe Yaba, one I've actually seen, you see some of these venture capitalists, even Nigerians, who are providing those mentorship, put them under their wings and tell them, okay, this business, this is going to be, there will be bumpy roads ahead. But when it gets there, you have a shoulder to lean on. And I can tell you how you can actually be able to navigate some of those particular challenges that you can see. Just like you mentioned as well, partnership, collaboration, fintech partnership, I think is also very important. So doing it in silos sometimes may take a very long way for you to be able to achieve that target. But when you see partnership, you understand, collaborations, shared collaborations tend to actually be able to accelerate the growth of such innovative ventures.
All right then. Business Morning will be right back after the short break. Stay with us.
welcome to the Triumph Against Odd podcast.
Most people go through their lives without knowing what their superpower is, right? But if you're lucky enough and determined enough to find your superpower before you get to a certain stage of your life, you will be incredibly successful.
Look, the first thing is you just decide not to look at the challenges, because if you do, it's going to end you.
The closest thing I think is that I had a deeply military background, which is a bit of a never say die background.
I saw an opportunity in non-interest banking, and I felt that the demand was there. There was pent-up demand for it. People were yearning for it, and I felt that if we did it properly, if we brought in professionalism into it, and if we brought in our various experiences from various backgrounds into it, that it could succeed.
Very few people do that because very few people explore their superpowers. They just explore bread and butter issues. I need to eat, and
Yes, there will be challenges. This is a very difficult business environment. The government keeps working on how to make business easier.
The first problem to overcome is really just starting, right? We thought about this idea for over 2 years before we even took the first step.
You cannot ignore this country. No, and to be from here, I think is an incredible privilege. Nigeria will be ascendant in my lifetime.
Attention business leaders. Want to make informed decisions? Join the ranks of the best with Premium Business Day. Access in-depth analysis and expert opinions to stay ahead. Subscribe now at premium.businessday.ng and unlock premium content. Plus, you get 50% off your first subscription. Don't miss out. Make smarter choices and seize new opportunities. Sign up now and elevate your business game. Visit premium.businessday.ng today.
Welcome back to Business Morning, and today we're actually stretching this topic because it's very beneficial to a lot of startups in Nigeria. What topic are we talking about? If you're just joining Business Morning, we're talking about a good voice that the finance minister is lending to startups, to small businesses, small and medium-scale businesses, to be able to gain funding from banks. And he's actually saying that banks should not just give it to corporate organizations that are already out there. He wants the same, to actually go for startups. So he's lending the voice out for banks to actually take this into cognizance and make it happen. And with me has been Mr. Muhammed Akanji, and
Thank you very much.
been saying so much about this. And Mr. Muhammed, let's still, talk more about the strength.
Okay.
Now, in what ways can banks actually balance profit motives? If they actually accept to do these things, how can they balance the profit motives with their national development responsibility?
And because, thank you for that question, Destiny. Yeah. It is very important for us to realize that that one of the major reasons why banks are not innovative, are not SME focused, was actually because of the low margins that they tend to be able to get. Just like I said, the market with volume, much about volume. You have large, compared to when they engage in some other big ticket transactions that can actually be able to times 3 or 3 times, 4 times of what that can actually be able to bring. But it's very important as well that these banks also be able to operate in an ecosystem. The ecosystem is Nigeria. And you also be able to have that corporate social responsibility to ensure that you balance your monetary pursuits, your financial gains with those national development. So maybe some of the strategies and what analysts, commentators and experts have actually suggested to them could be maybe banks can think around a kind of a blended finance model, where they can combine a consensual, not everything should actually be about making money, for example. The minister actually mentioned that please see these SMEs innovating or innovation hubs, see them as partners in nation building rather than risk centers that will just actually be risk centers where you just be able to put money and then you may not be able to get your returns. See them so maybe concessional interest rate could help. So not all of them, because we feel like, just like I said, a regulatory sandbox where you give targeted interest rates that is quite different from the one you give to big corporates. In fact, the existing interest rate is so damaging that it's not something that they can be able to cope with. So a blended finance model where commercial loans can actually be given to maybe established innovation enterprises. They also be able to consider some concessions, Not everything should actually be concessions in terms of actually see it as a form of a national responsibility. And such that these people directly or indirectly create jobs, directly or indirectly contribute to the growth of the economy, and it tends to actually be able to make that bottom of the pyramid to actually be a bit more inclusive in terms of achieving that development. So I think blended finance model where commercial rates and consensual figures actually be able to be given to some of them. And the second thing I think I'll actually be able to put down here is maybe banks should also be able to consider a kind of an impact investing framework, investments. Not every or social investment. That's what this should be seen as, rather than the usual financial investment where I'm putting in money and I'm going to be able to get returns, just like you said. Because remember, most of all this innovation, most of all these technology innovations, most of all it can be technology, it can be a lot of other things. They tend to be able to have a kind of a forward integration into the banks as well. At the time, before the emergence of, for example, mobile money that banks are now be able to latch onto, where today we see how fintechs, for example, have actually been very, very, very active in that space. Look at, for example, the whole pay model, the palm pay model about using, people's, you don't need to be able to come to the bank, for example. And then, so when they did that, to be able to see the drive, banks are trying to be able to latch onto that now to see, okay, you can be able to do borderless banking. You can actually be able to do, without actually being able to come to banks.
They're not even really doing much. They're not doing so much.
Exactly.
The cost is working, and Nigerians are seeing results
of those things. So, and then you tend to be able to latch on those. So, impact investing framework, I think, is something that banks can also be able to draw out as well. When they draw it out, and then try to be able to draw the line. Because innovation financing sometimes may not be able to yield the instant gain they are looking for. But in the long run, it will definitely be able to pay off for the cost.
Okay, moving on. How can improved innovation financing contribute to Nigeria's GDP growth and job creation?
Job creation. I think we have actually been able to, we can't overemphasize that enough, definitely. So the MBS believes that over 50% of the country's GDP is contributed by these SMEs.
Oh, wow.
To which 85% of those were innovation, creative and innovation hubs that actually be able to do a whole lot in terms of actually be able to make that particular significant contribution. So it is, and the government saying that, in fact, the growth that we achieved in the first quarter and second quarter of this year, that was actually over and above the projected estimates. Remember, we're actually expecting 3.4, and we got about 4.2. Was actually driven majorly by some of these SMEs. The government attributed that. And we're saying that the 50% contribution, how can they be able to drive it towards 70% for the rest of this year? By the time maybe when the figure comes out, when they release the stat, you can be able to see that. Because just like you said, the women, the youth, a lot of people are actually coming up with amazing ideas. That are bringing country beyond just, just whatever they are, that are actually contributing towards, the changes in the economy, the serious economic structure. So they actually be able to do that. And in terms of employment as well, presently, they said 80% of Nigerian workers, 80% of workers are actually employed in that particular space.
Exactly.
So that is huge. So, which means it is an important sector that we need to be able to focus on. A lot of attention needs to be given to it to see how it can actually be able to drive,
there's something we call passion, right? When people are driven by passion, they do a lot of productive and result-oriented activities that actually, is beneficial.
Of course. They are seeing they are not seeing it as burdensome to them.
They're not even seeing it as doing so much.
Anything. But that thing is actually working and it's actually
And it's
creating,
result-oriented.
so the multiplier effect sometimes result-oriented, I think that's the word.
Exactly.
To actually be able to do that. So in terms of GDP contribution, in terms of job creation, they are playing a very vital role in that space. Little can the government be able to contribute. The big corporates too, that banks for now are actually focusing on. There's little they can actually be able to do. You understand what I'm talking about?
Exactly.
It is all these, some of these in little hubs, in little centers, in
People do a lot of
hubs,
things, creative things, creative ideas that metamorphose into big businesses.
Big businesses in the future. By time, so which is where collaboration will now be in the future. But
Exactly.
starting with those ones, we need to be able to pay attention to them, because that is what will actually be able to drive the level of development and the level of inclusive growth that we actually desire.
Because in the area of tech, you find out that a lot of startups are doing a lot. When they find out that this is good, now you now find out that even copying of notes is not necessary.
You can actually be able to have
copy those notes.
I have a note taking and everything is done.
Things are happening now in the tech world that you and I will be amazed.
And how speed that.
If it were not for support from banks or other financial houses, how will these innovations actually come to light? And then seeing that you and I are actually appreciating
those particular efforts,
that this creativity are actually bringing.
Very huge. So the key thing, just like you said, are all these, the innovation hubs. It can be even about power. It can be about water, providing water. It can be about tech and life. Is the centrality to achieving the economy of our dream, that economy that we actually be able to desire. They are very central to it, and this is why it is good. Just you began with that. The minister mentioned that the government too needed to be able to walk the talk to ensure that you give them the necessary buffer, the necessary support to achieve. For them to actually be able to scale these businesses where they are may not be able to allow us to achieve that growth. Except you give them that support, you give them technical support, financial support, mental support, as well as necessary support that's actually needed to allow them to actually be able to get to that next stage, which is exactly where we will now be able to see those benefits on a larger scale. But before I even forget to say what I want to even say, is that I think banks should take advantage of this trend and actually allow businesses to be pitched to them every 6 months. Okay.
If without even being if they're not too particular about televising it or putting it out there in the public space for people to say, oh, they're giving support, and they just do this, even if it's in a coded form.
Of course.
Now they have to do publicity for it, because a lot of people that have these innovations might not be able to know if they don't give publicity to it. Now I'm saying that if they do this every 6 months. They should be able to pitch ideas to them.
At least maybe
serious-minded people. They actually pick a lot of inventions and innovations that will actually see the light of day and actually benefit a lot of youth. And that will also make a lot of people that are entrepreneurs to actually build their dream, knowing fully well that they will have an opportunity to pitch it out somewhere to a financial institution that will be able to finance. Exactly. That is a lot of things will unveil.
And then a lot of
things will unfold.
And so because it is good, just like to be able to add to it as well. So providing such innovative financing, just like you said, as a hub or as a product, because for banks, you tend to also see that apart from maybe the local implication it will have, it creates that thing of actually spurring digital exports. Look at some of our music, for example, look at our movies. So digital exports sometimes, because you tend to be able to see what's Nigerians are actually be able to put out there. Social media, for example, will actually be able to help to see how it can spur such digital export of things that we have locally here. And then instead of actually be able to, the government focus on, maybe oil, as a monocultural economy that we've been, how the diversification effort of the government will actually allow us to actually be able to get a whole lot of also foreign exchange by, digital export that can actually be able to come from providing such innovation financing. Because we have individuals just scattered around the nation that actually be able to have things that are not only beneficial locally, but can also actually be showcased to the world
to
out
the
there.
world out there.
Another very important thing that we need to be able to
look out. Ah, wow! This massive point that you just gave is very, very beneficial. Now, are there global models or case studies Nigeria can learn from in financing innovation
financing? So, of course, I mean, maybe those I can actually be able to remember on top of my head now. Virtually global. It's a global standard.
Okay.
Even United Nations, we see them releasing templates. What can actually be able to encourage innovation? Maybe financing, innovation projects, innovative ideas, and things like that. But I'm sure we've seen the case of China and India.
Yeah.
I mean, those are two important case studies of what they've done. The India model, I think they call it SIDBI or something. That was a particular model. Okay. So where banks there tend to be able to give just like the credit with financing.
Okay.
They tend to actually be able to, not just a one-off grant, but refinancing projects that they ensure that they give to young innovators or innovators whatsoever that they have there in India, as well as guarantees to ensure that you can actually be able to take this product abroad, for example. You can actually be able to export this product and you get letter of guarantee from the banks. You know, that's the kind of a support. So if for example, somebody is actually trying to be able to tell you, oh, Destiny, I wanted to be able to market this thing to you that can actually be able to give you 24-hour electricity.
Sure.
And you are saying that, I'm telling you that, oh, do you know I have a letter of support from GT Bank as a bank? But these are also names from BusinessDay that can be able to give me that guarantee to say, go out there, market this to people, and then at least let's be able to see that guarantee from your hand, from such end, could give you that feel, that confidence that, okay, this is actually quite good. So I think that's what Indian government actually did. Similar for China as well.
Wow.
That they tend to be able to provide for innovators. You know, government-backed guarantees to be able
You're
to
very right on that. So because it's rampant out there.
Of course. So you know there'll be concerns around is this thing of quality. But sometimes when you see a government-backed, like if anything happens to this, you have a government guarantee, for example. Sometimes it's good. So if we have those banks as well providing such, when they have maybe a kind of a boot camp where every 6 months, like I said, people pitch ideas, they pick them, they have those ideas, translate it into something tangible, and then you tend to be able to give them that particular support.
It's just like giving life to something that's begging for life, and that will definitely bloom.
And can bloom.
It's a bloom,
you know it.
So now financial tools or instruments could be introduced to de-risk innovation and encourage more banks to actually participate.
Because the major worst of the banks, the major challenge of the banks from not committing so effectively towards innovative financing, just like we said, is the risk factors.
Okay.
You know, just like we said, these are small businesses
who
you may not be able to, don't know what's going to happen to them. If you're just starting up, I want to give you a long-term loan of payback in 5 years, where most of the SMEs does not even last up to 3 years. You understand? So those risk factors are there, apart from other things. But there are the risk factors. The minister mentioned that one, we see maybe the government through the DFIs, development financial institutions, whose goal is actually to focus on innovative financing could help. Maybe revenue sharing, revenue-based financing as well. You know, a kind of one way is to ensure that repayment of those loans sometimes maybe you should start with when the startup started to be able to make income.
To stabilize.
To stabilize the business.
Not the timing you are giving.
Just give the loan and then you're just talking about things that you're just trying to find your feet. You're just giving a life into it. And
they will not be able to pay back their loans.
So maybe there's a need for startup income. There is a need. A revenue-based financing model is one way that banks need to be able to look into to ensure that they can de-risk, because most of all these businesses, the concern, the challenge that I have loans to pay sometimes to bank is what pushed them to also be able to engage even in things that are actually
risky things. That might crash everything
in the first place. And so before something that's just coming on board, we just actually be able to crash before you know it. So I think, and then loan guarantees as well. Just like said, banks need to be able to give it. They've actually been trying to be able to eschew away from there. But since the government is involved now, the minister has said that maybe coming from the government, and then the government can actually be able to partner with the banks to ensure that you can actually be able to give loan. The government can give loan guarantees to ensure that if there's any default, yes, the government will actually be able to come in and then be able to save the day. So maybe that can also be able to help the banks to be able to de-risk, you understand?
Exactly.
Instead of actually allowing them
Well, I know that if we give this time, we can be here for 2 hours talking about this, because it's something that we've always wanted as youth to actually
government to actually
help, yes, and make out a lot of difference. All right, I want to thank you so much, Muhammed Akanji, for coming. Staying with us, this morning and giving so much, insight in this very, very important.
Thank you very much.
Thank you so much.
Like we said, we hope the government will be able to.
We hope so, because if it happens this way, there will be a whole lot of difference.
That can actually.
I would pray it happens.
Hopefully.
And that's it for Business Morning today. We want to thank you for staying with us as we track the latest trends shaping markets and the economy. Remember, business decisions are stronger when backed by the right information. I am Destiny Momoh. Do stay tuned for more updates on Big Story, and join us again tomorrow for yet another edition of Business Morning on The Breakfast Show. Good morning.